Hey everyone, and welcome back to another video for today. So quick update on the trade desk. The stock is down over 28% after hours after the company released its latest quarterly figures, which means that we're back to prices not seen since, well, the last time they reported their quarterly figures back in May. As you can see, back in May before they reported, stock was at around $60 or so. Then we've had that big gap up after earnings because, well, it seems like the issues with the launch of Kokai and all of that were behind. And so, well, after the stock crashed around 65% or so, we have seen a little rebound, right? There was also the tariff story and all of that, but the stock did rebound 46%. Now, after that earnings report, you can see that gap up. What happens now is that it does seem like tomorrow the stock will open and, well, clear that gap. We can, of course, go a little bit lower. But again, don't forget that the stock is still up right now with the after hours action, 46% since the April lows. Just a small reminder. So what exactly has happened? Was it again a miss for the quarter? Or is it maybe just because the stock was overextended and too expensive? Well, you guessed it, it's the latter. It's the fact that the stock did recover quite quickly. Okay, some recovery was granted because I do think that in the low 40s, it was very, very attractive. But as I said a couple of weeks ago when I made a video, stocks to probably take profits or sell before they report earnings, the trade desk was on that list. This is a company, of course, with very good margins. And yeah, multiples wise, we've seen more expensive. But this is a stock, as I keep saying, this is a stock that has never been cheap. But at the start of the year, it was extremely, extremely expensive. And so the stock crash after that did not surprise me. First miss, right, in 8 years, plus stock being expensive, you see the stock pull back. Now, we have seen the stock recover quite rapidly, but it now became, again, an expensive stock. And an expensive stock, even if you deliver the numbers, because they did deliver. It was a double beat for the quarter, although some might say that they just missed by 1 cent EPS, but let's say a double beat for the quarter, and then guidance in line, but was soft. Yeah, that's not enough. Okay, that's not enough to justify the valuation, and so you're going down. Plus, as you will see, growth is slowing down, although there is an explanation for that as well, because last year was, of course, presidential election, a lot more spending, so the year-over-year comparisons are quite tough. And so if we will go and look at the figures for the quarter, you will see that all in all, the quarter was fine. It's still a very good company. But as we all know, very good companies, there's always a correct price to pay. So let's go over everything you need to know in this video. If you enjoy this type of videos, hit all the buttons. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's first start off with the comments here. Q2 was a strong quarter for the trade desk with revenue growing $694 million, up 19% year over year, as we continue to outpace the digital advertising market. The first half of 2025 has been defined by meaningful innovation across our platform. Kokai is helping advertisers drive better results by integrating more data into every decision, using AI as a co-pilot and unlocking the full potential of first-party data. We've also made significant progress in CTV, retail media, and the supply chain, empowering the world's largest brands and agencies to reach audiences across the open internet. With continued innovation in Kokai, growing adoption in OpenPath, and deeper partnerships across the ecosystem, we're delivering exceptional value to our clients and helping to strengthen the open internet in the process. And so for the quarter, these are the results. Again, these are good results. If this was any other company, I think the stock would have gone up. But this is the trade desk. This is a company that is usually trading at, pun intended, trading, trade desk, blah, blah, blah. Haha. It's a company that's always trading at a premium. And so, they don't control the stock price. They don't control the valuation that the market gives them. What they do control is the business and the execution. And that has been quite good. Now, you might also say, but look, there's a new CFO. Maybe that scares the market as well. Maybe, maybe algos are acting on this. Could very well be. Now, if we look at a couple of the highlights here. So as we've seen, Q2 revenue grew 19% or 20% if you exclude the US political election spend. And the same will be said when we look at guidance. Guidance, 14% growth for next quarter, but if you exclude political spend, it would have been around 18%. But still, that is decelerating, right? Growth is decelerating. In addition to high growth, continued to produce strong EBITDA margins and free cash flow generation. Total advertising, total addressable market is heading towards $1 trillion. CTV is their largest and fastest growing channel and will be for the foreseeable future. They're still early in tapping into the large shopper marketing opportunity. They see significant opportunity for international growth. And the last point here, objectivity to their greatest asset, which is they align their interest with the buy side. They've talked a lot about the walled gardens, the Googles, the Metas, the Amazon. The Amazon advertising business is huge, as you've seen. But most of the advertising there is just Prime Video and the advertising, the promotions that you see on Amazon.com. So they've said, look, Amazon doesn't really have an incentive, although the Trade Desk would love to partner up with Amazon, and they think it would be great for Amazon to participate here in the open internet with regards to advertising, because there would be also less of a bias. Okay, we'll see what happens. Jeff Green, which is the CEO, was very, very excited in this earnings call. Every time a good question came in, he's like, oh, I'm very, very excited to answer this question. Well, actually, that topic, I'm the most excited to talk about that. Okay, I mean, maybe that's his way to calm the nerves of the market. Now, this is revenue. Revenue has been growing quite well over the last couple of years, right? Since the June quarter of 2019, so 6 years. Compounded, it has grown 27.7%. But as you can see, more recently, growth has been slowing down, and then taking into consideration growth for next quarter, it's expected to slow down even more. Now, what they were most excited about to talk, especially Jeff Green, was Kokai. So Kokai leverages AI to help advertisers manage and optimize their campaigns across various channels on the open internet, providing better performance and measurement. They've already seen some solid results here. So clients using Kokai have reported significant improvements in their key performance indicators. For example, a Samsung omnichannel campaign saw a 43% improvement in reaching its target audience, and Cash Rewards experienced 73% improvement in cost per acquisition. The platform enables advertisers to target specific moments in live sports through partnerships with companies like Disney and Sky TV. It also incorporates retail media data from partners like Instacart and Ocado to provide precise measurement of business outcomes. They've also seen high adoption rate. Approximately 3/4 of all client spend is now running through Kokai, with full adoption expected by the end of 2025. Clients who also transitioned the majority of their spending to Kokai are increasing their overall spend on the Trade Desk more than 20% faster than those who have not. This is highlighting the platform's value and effectiveness in driving advertisement investment. Kokai's Deal Desk, currently in beta, uses AI forecasting to improve deals between advertisers and publishers. It monitors deal performance and suggests alternatives when deals underperform, enhancing efficiency and outcomes. And so, of course, you can imagine that once everyone has adopted Kokai, once more and more clients see that, whoa, actually this is quite effective, and suddenly they all increase their spend, well, then we should, theoretically speaking, we should be seeing growth reaccelerate. In theory, right now, the market is like, you know what? Okay, good results, good comments, but we still have questions. And so we are pushing the stock back. The market is pushing the stock back down to, let's say, more reasonable levels, right? More reasonable levels for the performance that this business produces, for the result that this business produces. And we'll see what happens, because this is fairly new, right? Kokai and these results here, fairly new. So let's see what happens in the upcoming quarters. Full adoption is expected by the end of 2025. Okay, once that happens, let's see if they are all increasing their investments, if they're all increasing their ad budget, if they're all increasing here the adoption of this technology. Maybe they'll get new clients in. Remains to be seen. But that's the thing. It remains to be seen. And for everything, there is a right price to pay. Because if we go back here and we look at the stock, if you were one of the unlucky ones that bought the stock 5 years ago, almost 5 years ago, it was also at $60. You would have done nothing. Yes, of course, you could have sold already the top a couple of times, could have also added in the $40, of course. But you see the range of where the stock has been trading for the last 5 years. Great company, but as always, there is a correct price to pay for every single company. Here, another example of a company that performs well, but yeah, if you were one of the unlucky ones, you basically did nothing for 5 years. Now, we do not invest in the past business, we invest in the future of the business. Of course, in the past, the company was growing much faster. Can it reaccelerate growth thanks to the new products that they're launching? Thanks to them maybe taking market share? That's also a question that analysts have had on the call. Management were quite confident that this is going to happen. But again, correct price to pay. And then let's see what happens. Of course, tomorrow when the market will open, the gap here will be closed. We can go, of course, a little bit lower, or we could see the stock rebound. We've seen that time and time again. Stock opens lower, then suddenly it reaches a good price. Then we start seeing buyers coming in. So all in all, that's about it. It was a good quarter, just expectations were sky high, valuation was sky high, and there are still some questions about the future growth of the company. So that's about it. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.